the activity and like, a lot of the asset issuance is still on Ethereum. I think if I had to like sort of pick one, I mean, I think all of them will matter. The question is which one ends up being the default. Ethereum probably does have a structural lead. Can they defend it? We'll see.
The Clarity Act seems like it is on track to finally become a law. Venture capital is pouring back into crypto in size for the first time in a while, but where is it going and what should investors know about this? Hello and welcome to the Milk Road Show, the podcast that knows that when your wallet gets too hot, it's time to vent your capital. I'm your host, John Gillen. Today is Thursday, May 21st, and today we are joined by Min Teo. Min is the co-founder and managing partner of Ethereal Ventures, a crypto startup-focused venture capital firm, which she launched in 2021 with Ethereum co-founder Joe Lubin. Min previously led investments at Consensus, and she has been making some big moves in crypto lately. She's going to give us an inside look at all the alpha you need to know about where VCs are finding opportunities in crypto today. So if that sounds good to you, make sure you like and subscribe, share this episode with somebody who's going to enjoy it. Today's episode is brought to you by Cape, the privacy-first mobile carrier, which I think we'll talk about privacy a lot in this episode. Pharos, the layer 1 built for RealFi. Nexo, earn interest, borrow, and trade crypto. And without further ado, welcome to the Milk Road Show. Min, how are you?
Thank you, John. I appreciate you having me on.
I'm really glad to talk to you today. I think there's a lot of cool things you guys are working on. But Min, before we get into Ethereal Ventures, I thought it would be a good place to start with you just telling us a bit about yourself and about Ethereal Ventures and what you all focus on in terms of venture capital investing in the digital asset space.
Absolutely. So I'm originally Singaporean, grew up in Canada, have sort of lived in the US and in the UK for a lot of my life. I started my career in 2008, so in the heart of the last financial crisis, which was a very interesting time to be doing investments. I learned a lot about, how things can go wrong and how not to catch a falling knife. I did private equity and private credit for 7 years, and then helped build a fintech business in the UK that was focused at the intersection of payments and loyalty. And that was actually my come to crypto moment. A lot of people talk about when they first bought Bitcoin or Ethereum. I bought it early, but sold it too early. So it wasn't really meaningful to me, aside from a lot of FOMO. But, when I was actually working with our engineers to reduce our cost of payments, I had this moment where I thought, it's crazy that, trying to work on new payments for consumers, we can't actually deliver payments with a positive gross margin at the time. Now that's definitely changed because of all the amazing regulatory capital that has been placed over the last decade. But at the time, it just wasn't possible. Because all the banks at the end of the day want to protect their business. The back end is antiquated. They know that the value chain is getting squeezed, but they're not going anywhere. And my aha moment was, wow, we put all payments on, after reading a Bitcoin Ethereum white paper, we put all payments on blockchain rails. Like users get instant settlement, global by design, 24/7. That's what the consumer wants. And that's what really, inspired me to move to the crypto space full time. I was fortunate enough to meet my now co-founder, Joe Lubin, and was leading sort of strategic acquisitions and investments for him. Eventually helped to sort of institutionalize the investment arm at Consensus. And one of the companies at Consensus incubated early in the day was MetaMask. And as MetaMask, grew to beyond our wildest dreams when we incubated it, it became very clear that Consensus also needed a proper corporate VC, because every time I was talking to companies, they thought they would get a MetaMask integration, which was problematic. I think this was also coming on the back of many of our founders telling us that, hey, you guys should actually do this as a proper fund, as a proper team. Like, we really like working with you. You are very differentiated investors. We also wanted to invest, more cross-chain. Consensus was very Ethereum focused at the time. And, this gave us an opportunity to actually work with, a broader group of founders, broader group of investors, and really, fill a gap where we saw crypto VC wasn't really delivering to founders. So in 2021, we launched Ethereal Ventures. So most of the team have been working together since 2018, doing exactly like, what we're doing today, which is working with technical founders, being day one partners to them, meeting them where they are, wherever they are in the world. Our team is also remote, so we do cover a lot of ground, and acting as co-builders to them, not just passive capital in their earliest inception, and helping them scale their businesses. So that's a bit about Ethereal. We are generalists. We are very thesis driven. So, we try to sort of switch up our theses every 6 months or so. We just published our thesis document on our Twitter last week, if anyone would like to see it. And that has led us, to invest in companies such as Eigenlayer, Aztec Protocol, USDAI, and many other great DeFi protocols.
If you're not seeing this, you're trading blind right now. There are real moves happening behind the scenes that most people don't see until it's way too late. Inside Milk Road Pro, you can track exactly what our analysts are buying, selling, and what's on their watch lists before it moves. You can try it out for just $1 for 7 days. The link is in the description.
Okay, thank you so much, Min, for that context. I think you guys have been very active in investing in digital assets, but some people may not know you, so I just wanted to give that context before we go further here. I saw an interview you'd done in Fortune magazine recently, where you talked about how you guys have been outperforming a lot of other VC shops, and I'm curious about what you look for in terms of finding opportunities for these outsized returns, and lessons learned over 5 years of doing VC in crypto, which has been, that's a long 5 years in crypto, and just how you go about finding this outperformance at a time when so many other VC peers have been sort of struggling in this space.
Yeah, I think crypto has been a roller coaster over the last decade. And, our team having worked together for mostly like the last 8 years, I think we've seen sort of bull markets, bear markets. We've learned a lot of valuable lessons along the way and try to integrate them as much into our process as quickly as we can. I think our performance has really come from having high conviction bets in people, underwriting theses for each investment, being early, also being patient, and being willing to look stupid for a long period of time often. I truly believe that the key to success in crypto, and more broadly in VC, is about picking the right founders inside their narratives that will compound. The thing that we try to avoid at Ethereal is to fall in love with a thesis or idea. And when you're at the early stage, you do have to daydream about what the future can look like. However, if you fall too attached to a certain idea, you sacrifice founder quality in order to have exposure to it. And building a successful company from the ground up is an odds-defying feat. A founder has to be somewhat maniacal to pull it off. They're also the best arbiters of their time, because that's the opportunity cost that hits them the most. So if you back smart people, you kind of got to follow what they have conviction in and, support what they're building. On the flip side, if you have like a really interesting idea, but the founder isn't able to execute on it, the best you can do is get a middling outcome. And that's not the business we're in. We're really looking for venture style outcomes where, we can sort of return the portfolio with a single investment. So I think staying founder first has really helped to keep us out of trouble, because crypto in particular has a reflexivity that is very dangerous. It makes a narrative chasing look like alpha for a short period of time. And then you see a sharp mean reversion that's very, very brutal. I think many of us have learned that the hard way in the early days, and we try to avoid it. Specifically on our performance, I think a lot of it, as I mentioned, is being early in a handful of names that we had general technical conviction and sizing up appropriately. Mark Andreessen has famously said that as VCs, the failure mode is not a failure of commission, but a failure of omission. So we've been fortunate to have had good exposure to our winners, such as Eigenlayer and USDAI. These were long-term bets that compounded over time, and they weren't really driven by FOMO. At the time, they weren't very popular bets that other VCs wanted to take. I think another differentiator is we really embrace liquidity as a feature, not a bug in crypto. The ability to harvest returns through tokens, the ability to recycle capital into token positions. This allows us to return capital LPs without waiting for traditional M&A or IPO windows. I think crypto native fund construction really gives you flexibility to structure around liquidity, so you aren't subject to death knell or just being stuck with high markups that you ultimately can't realize. And finally, we avoid investing heavily in categories where we don't have a firm thesis. This has helped us avoiding passing narratives such as, play to earn and some of the gaming NFT things that sort of pervaded 2021, and also some of the larger crypto blow-ups like, Terra and FTX. I think crypto really rewards being early, but also rewards being right on timeline. So it's not to say a lot of these ideas won't work out on the long term, but I do have to assess whether or not it will work out within the fund life cycle, which is capped at 10 years.
Gotcha. Okay, so you're focused on fundamentals. You're focused on things that have a broad thesis behind them, and not just pump chasing, narrative chasing, like you're saying, which is, I think, something all of us struggle with a bit in crypto. You said you just published an updated thesis for Ethereal Ventures. Could you tell us just a little bit about what is in that updated thesis, and sort of like what sectors you guys are focused on right now in this market in crypto?
Yeah, we do have a lot of great ideas for founders in, that we kind of group in 3 categories: new markets, TAM overhauls, and blue ocean categories. It's quite a dense document. I recommend people go check it out. But I do think we see a few sort of shifts happening, from user behavior really optimizing for convenience and usability, sometimes sacrificing decentralization as part of it. We see a lot of institutional adoption coming to the fore, and we also see AI and just generally changing how we see the world, and overhauling entire TAMs. For example, with Claude's release of Mythos, I think a lot of people in crypto are quite scared from a security perspective, and thinking about how they can actually shore up defenses on that. So I think our thesis document will span, lots of different markets, like the intersection of on-chain credit with TradFi, which is something that, is close to my heart as a former credit investor. We also talk a lot about new markets, say new compute markets on chain that will allow people to transact for scarce resources in a decentralized manner. There's also a lot on agentic commerce, agentic payments. I do encourage people to take a look at that.
Gotcha. Okay, so there's a lot in there. Min, I wanted to ask you specifically about something that's gotten a lot of attention here, a narrative that's really taking off, which is privacy. And I know you guys have some portfolio companies that are focused on this, but I just want to kind of start with your high-level outlook on this. Zcash has seen this enormous pump. It's running up towards $700. But we've also seen a lot of capital raises from other VC funds going into things like Circle's Arc and Canton Network and Tempo, the Midnight sidechain. It just seems like there's a lot of privacy solutions coming to market right now. Why has privacy become so important for crypto at this moment? And just what's your outlook on this landscape of privacy solutions that are coming to the market?
Yeah, as you mentioned, it's been a wild ride for Zcash, up more than 1,000% year on year. And I think, Arc, Tempo, Canton raised more than $1 billion, which is a lot of money. There are 3 reasons for this. One is structural, one is technological, and one is philosophical. I think privacy is really getting its time in the sun because institutional adoption is real. Banks are no longer just doing POCs. They're actually, really figuring out how to roll this out as soon as possible because the cost savings for them are real. What the competitors are doing is also real. So there's a race to deploy. And however, institutional build out is somewhat incompatible with full transparency. That's something that institutions cannot accept. So, a salary that's being paid on Solana is public. A hedge fund that's building position on Ethereum can be front run. Corporate treasury, can be moving funds that's visible for everyone to see. So until you fix that, you can't really get banks, asset managers, Fortune 500 treasuries fully on chain. They'll maybe dabble a little bit, but until they actually get the privacy that they require, be it confidentiality, the full shielding of all details, I think it really varies by institution and by use case. This is really what's stopping institutions from deploying at the moment. The technological reason is, I think, thanks to a lot of great teams, Aztec protocol included, cryptography now works at production scale. So ZK technology is fully baked. The technology is on par with demand. This is, with many different proving systems such as Plonk, ZK VMs, and it actually works. And it took many years of research and testing to ensure that it can work at this scale. And these are very complex systems. It did take, I know sometimes people say well, why did it take so long? And I think sometimes people don't understand the magnitude of when we think about things that are actually transacting on chain in a very independent manner, and to actually shield it properly and not leak any details. This is not a simple feat. When you actually do think about it at Visa level scale, which is what we're really contending in. The last piece, I think, is there's a lot of regulatory and geopolitical pressures that's bringing up the original libertarian purpose of crypto, which is censorship resistant internet money. And this is also like, something, a dream that brought me to crypto. I'm sure, there's some part of you that came to crypto for it too. And there's a lot of wealth seizures happening. There's a lot of, sort of data infringement that's happening. So I think everyone sort of wants the real Swiss bank account. And there's Multicoin, Naval, Bology have been positioning Zcash as like how Bitcoin should have been, which is privacy preserving. So ultimately, I think, that's really driving Zcash is being used as this next level sort of store of value that is privacy preserving and in a lot of ways advantageous for like wealth preservation. So I think, in short, the users of the technology and the capability of the technology are actually converging, and it's a really exciting time for privacy.
Your phone carrier knows more about you than your best friend does. Where you go, who you call, when you sleep, and they're selling all of it. AT&T, Verizon, T-Mobile, they've all been caught leaking data or cashing in on it. And your VPN, your encrypted messaging app, they can't fix what's broken at the network level. That's where Cape comes in. Cape is America's privacy-first mobile carrier. Same premium coverage you'd expect, built with privacy from day one. Your phone's network identifier rotates every 24 hours, so you look like a different subscriber every day. Call logs are deleted after 24 hours. You get 2 encrypted secondary numbers for signups and 2FA included in your plan, plus SIM swap protection that puts you in control of your number, so no one, not even Cape, can hijack it. Use code MILKROAD at milkroad.com/Cape for 33% off your first 6 months. The way we build wealth is changing. Stocks, savings accounts, real estate, that playbook is getting rewritten in real time. Nexo is the platform built for what's next. It's an all-in-one digital wealth platform where you can earn interest on your crypto, borrow against it without selling, and trade a wide range of assets. All in one place with 24/7 support and institutional-grade security. Oh, and by the way, Nexo is back in the US with new US clients getting 30 days of Wealth Club Premier access. That means elevated interest rates, lower borrowing costs, and crypto cashback on trades. Benefits usually reserved for loyalty program members. Get started at milkroad.com/Nexo.
Gotcha. Okay. So there's the three pieces: financial, technology, philosophy. They're converging for a lot of market participants at this particular moment in the market. I want to ask you about something. You touched on this a bit, but I want to ask a little bit more about this. Aztec Network is a portfolio company of yours you've been invested in. And as you said, this uses some very not complicated, but advanced ZK, zero knowledge technology to bring this privacy solution to market. Could you help differentiate this for me from other privacy solutions that are on the market? Because there's, there's Monero, there's Zcash, there's so many other ones. What is unique about Aztec that got you guys interested specifically in this company and in this solution?
Yeah, absolutely. So, the way to think about a lot of privacy solutions such as Zcash and Monero is they're very useful. It allows you to do private send and receive, private payments. What Aztec delivers is actual programmable privacy. So you have private smart contracts, and the differentiations are immense. I think aside from that, they're Ethereum native, they're fully decentralized, and there's real differentiation between them and permission environments, where I think there's like a big reason for permission environments like Canton and, Tempo and other sort of bank deployed blockchains. However, I do think that some issuers will also prefer something that is broadly decentralized and more censorship resistant for trusted issuance and settlement, and also composability with the broader Ethereum ecosystem. Something that we hear quite frequently is a lot of institutions want to deploy on Ethereum for that reason, but there is no privacy, and Aztec delivers that privacy. And if you ask me, well, why hasn't Aztec deployed that yet? Well, they're still quite new. They're actually rolling out a product in 2 weeks or so, which will be called Aztec Money, which I encourage everyone to check out. And they're in a lot of institutional conversations that I think will progress quite nicely over the year. The whole differentiation that the mental model I want people to take away with that is you do settlement on decentralized ledgers and you do execution on privacy technology, and that's really what Aztec delivers that's truly differentiated.
Okay, I'm glad you brought up the different layers and levels of this product and of these solutions because I think a lot of people are wondering where does the value accrue, right? Because you're bringing these products to market. The idea, as I understand it, is to bring a lot of not just retail capital but institutional capital into the digital asset ecosystem, and bring a lot of value, a lot of capital in for the first time. Where does the value for this accrue? Is it on the L1? Is it on the L2s? Is it just businesses that are leveraging these things? How do you think about that in terms of where the value accrues and how to capture that as an investor?
Yes. So for I do think like, ultimately for a lot of these institutional applications, my personal view is that they will accrue to the application layer. And if you sort of look at like the way that a lot of, and specifically, I think like what we're talking about is tokens, right? A lot of these L1 and L2 platforms are measured by tokens. I do think tokens are going through, a bit of a moment where there's a bit of a shift to where investors value them like tokenized equity. Part of the issue that you see is that oftentimes these have very, very high multiples that they're trading at, right? So it definitely fluctuates depending on like, sort of activity on the chain. But with that, like, it does make me wonder, like, how much further this can go. Don't get me wrong, like, Ethereum is, ultimately hundreds of billions in terms of like, value. That is massive, more massive than any other company, right? So I think you also have layer twos that are still like in depressed like valuations valued at like $1 to $2 billion. That is also massive for any company. But I think in the future, like what we are interested in seeing is, hey, all the underlying foundation is built now. Like let's create really interesting crypto, like, first companies on top of all these substrates that can do businesses in a very different way and capture value and unit economics in a way that, the old organizational structures are not able to replicate, particularly in this agentic world. I think it's very interesting, right? Where you can kind of create new finance platforms that don't have like the huge operations and customer support teams and still deliver like fantastic products to users. I think with something like Aztec, you also have native privacy attached to your product. This is something that doesn't really exist in a lot of applications in Web2. There's always a centralized entity that holds your data. So I think there's like a different way that we can sort of build application first businesses. And I also think there is there is a value from being application first, as Hyperliquid is showing as well. I think they just eclipsed Solana in terms of value. So it'll be an interesting race to watch.
Yes, there's going to be a lot of interesting races to watch. And yes, you're right. Hyperliquid is pumping its brains out right now. It's like over $60, just won't slow down. Okay, I want to ask you, you talked a little bit on the agentic economy and this intersection of AI and crypto. I want to ask some questions about that. But before we move on from this, I want to give the audience a sense, and for myself too, a sense of like the products, the services, the businesses that you talked about that are unlocked by this, and what that means in like real world use cases for this. And is this like for individuals? Is it for businesses? Is it for governments? You made a comment earlier about people paying payroll on chain. Is that something that could happen here? Or just like, how do you think about this in terms of businesses on chain that are going to be unlocked by this and what that looks like?
Yeah, so interestingly, actually, Aztec has had a lot of inbound from governments, which is, not something I personally would have expected. I think everyone is, but I do think everyone is realizing that this combined desire for like online identity and digital sovereignty requires these neutral privacy enabling platforms, which is, a fantastic thing to see. More recently, for example, Aztec Noir was used to ship the EU's example digital app. So I do think we'll see a lot more of this over the next few years. I think broadly speaking, like, businesses are the ones that have the most need for privacy. And ultimately they are the ones who have the most liability from having sort of cookie crumbs on chain, which is the current status quo today. For users, for the most part, Aztec will be in the background. They will use apps which will look like traditional web apps. Sometimes these will be built by startups, sometimes by big businesses. I do think there's an open question: how much do like end users and consumers pay for privacy? I think in this paradigm, this agentic paradigm, that will really be tested. But historically, the answer is not very much. right? So, I don't think that Aztec is really banking on that to change. And this is why Aztec made the choice to be fully general and also permissionless. So serving all of these users by providing them a platform which is neutral, and which people can use without thinking about counterparty risk, and building tooling that's well adapted to individual use cases, some built by Aztec, some built by the developer community. I think that really demonstrates the power of being open source and obsessed with developer experience, so you can really run the full gamut of serving whatever use case you want.
Okay, so there's a huge galaxy of possibilities, and everyone from governments to individuals is going to have some measure of interest here. Yeah, we'll see how that race plays out. I do want to ask some questions about AI and crypto, and we at Milk Road have been very focused on this. We have a whole nother brand at Milk Road AI, where we try to cover that industry. But something I've seen you say in comments is that this huge rapid investment in AI has sort of made the investment of capital in crypto a little bit more measured, let's say. But this intersection between AI and crypto, I think, is something that there's a lot of attention and prototyping happening in. And just love to hear your outlook for what this intersection looks like, specifically around agents, privacy, on-chain activity, and just what you're seeing at that space.
Yeah, I think that, there's almost a few questions imbued in that one. So
Right.
in terms of how sort of the advancements in AI have changed how we work. I think certainly from an underwriting perspective, we are very careful and sensitive to any sort of, defensibility that might come from any sort of AI induced, sort of releases, if you will. So will this actually be, could Claude or OpenAI release something that actually renders this completely useless? And I think that can be said for a lot of different things. It really is something that founders should think about before they spend their time on it. I think it also changes how we think about moats. Technological moats are maybe less valuable than they were before. And it's more about distribution, business development, regulatory moats in today's day and age. I think specifically for AI and crypto, there's so many possibilities there. I think, you have agentic payments. You also have inference requiring verifiable, compute. You also have machine to machine commerce that also requires stablecoins. So there's lots of intersections that we're keenly watching. One of our portfolio companies, EigenLayer, is working at this intersection. They're releasing new products, and their current suite also allows for a lot of verification of inference, which I think is highly useful. I do think that the agentic payments is one that is a lot of people are spending time now. I would kind of break that down into three categories, right? Which is you have human to agent payments, meaning I'm instructing my agent, and big question, when will we give our agent our credit cards to book stuff? I have not yet, but maybe that might change very quickly in the next 12 months. Then there's sort of agent to web, sort of payments. Ultimately, if an agent is somewhat a bit more autonomous, how do they actually make these bookings? Would they prefer stable coins? Would they prefer credit cards? I think for these two categories, it's going to be a mix. In payments, we have this concept of shared wallet, and you could see stable coins increase versus other categories for sure. But because payments has so much regional and regulatory sort of overlays to them, it's I think you'll really see a huge dispersion depending on the region, the use case, and it's ultimately going to be shared wallet. The real interesting price is agent to agent payments, and that's not really happening in size, and we don't really know what the requirements are of that really look like. I personally think it's actually one of the things that I've discussed with my team is how interesting would it be if agents actually create their own payments blockchain. They're oh, it's so cute, humans are trying to create something for us, we can just build this ourselves. And they built their own agentic Bitcoin that requires a proof of agent to mine it. I personally would love to see sci-fi ideas like that, even though I can't make money from it.
You just opened an entire dystopian future where the agents lock us out of our own value, but we'll just assume that won't happen. But I do want to ask you about where you think the value from all this settles, because the agentic economy is something a lot of people are speculating about. But as you said, we still don't really know exactly what this is going to look like, where this value settles. A lot of people think that it settles down to some version of Ethereum, and I know that Ethereal and Consensus. You work with Joe Lubin. You guys have kind of come out of the Ethereum ecosystem. How do you think about that value capture and where that settles? And do you think that ultimately comes back to ETH in some way, or what is your outlook on that?
Yeah, honestly, I don't spend too much time thinking about that. We're a cross-chain firm at the end of the day, and we see a lot of advantages in multiple platforms. So, I think that we have teams building on Hyperliquid, on Solana, and there are unique reasons why they chose that platform to build their businesses on that make a lot of sense to us. Like, I think a lot of the sort of tribalism on like where something settles. I think this is something that we probably don't think about as much because we think it's less relevant in today's world. Like ultimately, everyone is sort of like pushing to be better, faster, cheaper so that we can increase adoption and gain more relevance in the real world. And I think that's what matters. I do think there's a lot happening on Ethereum. We have, ERC 8004. We obviously have Coinbase X402, which is technically on Base. You have still 60% of stablecoins on Ethereum, 33% of RWA. So the activity and a lot of the asset issuance is still on Ethereum. I think if I had to sort of pick one, I think all of them will matter. The question is which one ends up being the default. Ethereum probably does have a structural lead. Can they defend it? We'll see. I think a lot of teams are pushing really hard to actually capture the price.
Trillions of dollars in real-world assets are stuck off-chain. Real estate, commodities, private credit, all locked behind outdated systems that weren't built for a global 24/7 economy. The fix? Bring those assets on-chain. Problem is, most blockchains weren't designed for that either. Pharos is. It's a layer 1 purpose-built for RealFi, a real-world financial infrastructure that lets assets be tokenized, verified, and traded at institutional scale. We're talking parallel execution for serious throughput, compliance baked in from day one, and infrastructure that actually connects on-chain and off-chain systems. They've got a $10 million incubator backing builders who want to make RealFi a reality. Join the Atlantic Ocean testnet and start building at milkroad.com/Pharos Network.
Yeah, and there's, like you said, there's a pretty intense race and competition around this. But I agree with you. I don't think that needs to be a winner take all, and I think that the increasing development and expansion of all of these chains kind of helps all of them, in different ways. And so it doesn't have to be so adversarial. So I appreciate that outlook, and thanks for sharing that. I want to ask you a question about this. Regulatory clarity has been something that digital assets have been seeking for a really long time, and you've been investing in this space for a really long time without that. But now we've seen the SEC, the CFTC collaborating on giving guidelines for this industry. The Clarity Act seems like it might finally come through and give us a market structure bill on the books. How big of a deal is this from your perspective, and what do you think this unlocks for the next stage of innovation and investment in digital assets?
Yeah, I think regulatory clarity has really changed where a lot of the alpha lives. When we think about pre-2025, we were betting whether or not crypto would survive regulatory pressure. It wasn't too long ago that, the industry was just trying to hide from SEC enforcement, Operation Choke Point. We had a lot of founders actually leave the US and build their businesses overseas because they were just scared to be a crypto founder in the US. And that has, how rapidly that has changed since January 2025, regardless of anyone's thoughts on the current administration, I think has really been remarkable. And as such, the game has changed. Now the alpha is betting on what gets built because the regulatory question has largely been settled, at least in the US and increasingly in the EU. And that opens up entire categories that were very uninvestable 2 years ago. I think there's crypto now today is graduating from a very closed ecosystem of crypto native users to a substrate on which AI and web infrastructure, institutional finance, consumer fintech apps will all build on. And it's a very exciting time. When I think about regulation, I think it makes sense for us to sort of focus on creating the aperture in which companies with product market fit can actually build in. One thing that and we talked about this in earlier, is I do think that the last few years, we have been very focused on pushing blockchain platforms as general computing platforms. And they certainly are that, right? They have the ability to serve lots of different use cases and allow this fantastic tapestry for developers to build on. However, if you look at a lot of other technologies such as computers, right? Computers basically have like more of a military background. Then after that, serve like the science industry and then the business industry. And it wasn't until they really nailed those use cases that they became smaller, faster, cheaper to be put in people's houses with like microprocessors and like graphical user interfaces, and then became personal computers. And I do believe that with crypto, we have to actually nail a use case really well. And right now, what's been presented to us is payments and tokenization. So payments for users, tokenization for institutions. And what the regulatory clarity, like, stuff like the Genius Act, stuff like a lot of like, the ETFs being cleared, we're all crossing our fingers for clarity. These ultimately, like, even though some founders might say, well, I'm not building in that, how does that really impact me? But I think it allows us to really show that now that we have, the regulatory question is settled, what can we actually build? And I think it's really interesting to see the industry really just aggregating around these specific use cases, because we want to create that like magical aha moment for users, for like institutions, the same way that other technologies such as AI have.
Man, I have really enjoyed this conversation. You have a wealth of experience and wisdom to share. So I'm really glad you came on the Milk Road Show to share all this with our audience today. I want to end with one question here. I usually like to ask people near the end of the interview, what are you most bullish on? What's your price prediction for things? I'm not going to force you to give that kind of an answer. I want to ask a different one here. You have raised a lot of capital to deploy into crypto. As my understanding is, your fund too is still a bit less than 25% deployed. So you actively have capital to send out into the market here. Where are you looking for the rest of 2026? Is it privacy? Is it payments? Is it tokenization? Is it something else? Where's the bulk of your attention, and where do you think you're going to be deploying some of the rest of this capital you've got raised here?
Yeah, it's an interesting question because, as much as we are thesis driven, we basically have to look at what the market serves up to us. And what the market serves up to us is what our founders, like, smart founders, spending their time on, daydreaming about. What we've noticed is a lot of people are building on AI and crypto. They're building in payments. They are building in tokenization use cases. Some of them are also building in like the supporting infrastructure of privacy, security, and identity. And I would say that runs gamut, and we have interest in all of them. We have like sort of theses in terms of like what shape and of company we would be excited about in each category. I do want to mention one other piece that we remain to be excited about, but I do think has some stuff to figure out. Like we still are very excited about DeFi, but we do think there are some security issues that need to be figured out. I think it's so powerful where you have global access. You are delivering products to people who don't have them. You have global pool liquidity, composability, interoperability, and it is such a shame that like we can't sort of figure out the like security piece yet. And I think it is very solvable, but we need to sort of rebuild that trust for sort of more people and more institutions to actually deposit more capital on chain. That is like, one of the things that I'm thinking about a lot personally. How do we ensure that more people, develop more trust for DeFi so that category continues to grow?
Well, if you are building in crypto or in digital assets, get in touch with Min because she's got capital to spend. On that point, Min, where can we send people to find more of you and your work online?
Absolutely. So, I'm my Twitter handle is _Min Teo. Our Ethereal's Twitter is Ethereal VC, and our website is ethereal.xyz. We are reachable at hello@ethereal.xyz. We read every email. And if you're building in any of the categories or just building something that you're really passionate about, please reach out to us. We're always happy to chat. Like we also chat to what we call proto founders, which is people who don't really quite have an idea yet, but are very excited about the idea of being a founder, and we spend time brainstorming with them on directions that they can actually do tunnel into to get inspiration from. So please reach out to us.
Well, Min, I hope you all keep building as well. Really appreciate you coming on the show today. Thanks for being on the Milk Road Show.
Thank you so much, John. It was great chatting with you.
You too. And thank you all for joining us. I hope you all learned something today. Until next time, as I always say, stay safe, stay educated, stay bullish, and we will see you all in the next episode of The Milk Road Show. Thanks for being here, everyone. Bye.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.